welcome to Utah. Welcome back to Utah. Tonight with me, I have Miss Mary Jones, and tonight she will be sharing with us health and life insurance. And we're going to ask her a lot of great questions to go into the more of a scope of what the agent looks like and how do you proceed in profession as an agent and what type of policies are out there. We're just going to get all into the nooks and crannies of health and life insurance. So welcome to the
Absolutely.
show.
Thank you so much. Thank you for so much for having me.
Thank you so much for agreeing to do this with us tonight. So my first question would be, can you tell us a little bit about yourself?
Okay, absolutely. Well, my name is Mary Jones. I'm born originally in Columbia, South Carolina, moved to Atlanta, Georgia, have been in Atlanta, Georgia for over 20 years, and now I have transitioned back to North Carolina to be closer to the needs of my father, who is in a facility in South Carolina. So I'm just all over the place. But I'm the mother of one son, and I have been in insurance now going on 7 years. And I started off as an agent that wanted to just do the supplement plan. So I was doing supplement plans, enrolling into large corporations, doing the enrollment season to for their short-term disability, cancer plans, and some life insurance as well. Then I moved over into more of the active life of the life insurance, and then I moved even more actively into the Medicare segment, which allowed me to be able to assist, elderly, turning 65 or those with disabilities into their Medicare plans as needed, the plans outside of the original A and B. So this year, I went even a little bit more aggressively and I started my agency, which is NSL Solutions LLC, and it is incorporated here in the state of Georgia. And now working with companies like Farmers as well as Progressive. So I am also an insurance adjuster. So I go out and assist people to understand the damages in their home, assess the problems with their damages, as well as pay out their claims for the damages to bring their houses and homes back to the place it was before any type of damage took place. So I have been consistently trying to stay focused into the world of insurance, and it's just taken me in so many dynamic areas of the world of insurance.
Wow, that's so interesting that you said that is so broad. And because if I was looking at insurance, I would just think, okay, it's just life insurance, it's just health insurance. But you, like you say, you get to work with the elderly population, and you get to go and do claims as well as to go to people's homes and look at what they need to fix up and all of those things. That is a broad profession. So
It
would
is.
you, I guess, would you say that that will be a good profession? I know that we're in the COVID season, so how does that affect you doing those things? Do you do it over the phone still? Are you virtual, or how does that affect that?
COVID hasn't stopped anything. As a matter of fact, COVID has pushed a lot of people, persuaded a lot of people to push the pedal in regards to life insurance. And you know, things doesn't stop just because the world around us sometimes want to slow up and stop, because things are still need to be, I have a son, like I stated, my son is 24. He decided he wanted to take a break from school, and I know how his breaks are. So I was like, no, you're finna go take this insurance course and we're going to work. So so just this last September through December, we worked the storms together. We actually basically moved down to Alabama to be able to assist, those who were affected with the storms from Alabama, Mississippi, Louisiana, and Texas. And so, now that he has seen that world, to answer your question, is it a good profession to go into? Yes, because it's so broad, and it's so many opportunities. And we had that discussion today, and he's like, "Mom, I am so glad that you pushed me into this, because at initially my whole focus was to get him licensed so that if anything happened to me, my residuals can go to him without any problems. So any work that I've done from day one to the day I die, you constantly get the residuals for it, and I didn't want it to die with me, so I wanted to make sure that he was licensed to get his residuals. But now he have seen this whole world and the whole dynamics of it, and even in a slow season someplace else, there's a fast speed season someplace else. So I think it has helped so many other people to learn how to adjust to virtual, to be able to be more technical, to get online and to see people and talk to them over the phone and get their questions answered. And you know what? It saves a lot of gas for a person like me. So yes, I really, anyone who, especially in the younger age, that has an interest in this field, I would recommend it. I definitely will, because it not only gives you the opportunity to, like I state, to make income for yourself, to be able to help individuals, as well as to create a life of residuals that will trigger down not just from you, but through your children's children, family. As long as those policies stay active, it helps to create a lifestyle for you know you and your family to come.
That's awesome. Can you, I guess, describe what life insurance is? Because we do have like Generation X, millennials, all in between, younger than that. So if they are looking, I just want them to understand what life insurance is.
Okay, so there's different forms of life insurance, and as we was, briefly talking before the show actually started, remembering the days when the life insurance agent would come by and they would basically sell what they call a penny policy to our grandparents. So our grandparents knew that it was necessary to have life insurance so if anything happened, they didn't have to worry about burying anyone. Or we see a lot today, a lot of GoFundMe accounts when people are passing away, especially young kids are passing away. So it is very good for that. It's good for the instance of when someone passed away and you're able to take care of their expenses. In the world of insurance, what I had learned after I came into this career is that people not only get life insurance just for burial, they get life insurance to make sure that those that they left behind are secure. I have clients that say, okay, I need a $500,000 policy. And what they do with that $500,000 policy, they have it set up in a trust fund, where when they pass away, because their wives are most of these men, their wives don't work, they're homemakers, so they have it
Mhm.
set up in a trust fund, and they're actually calculating what it would take a year, for them to live each year. So it may take $40,000 for them to live a year after they die, and then another 40,000. So when they get a $500,000 policy, they set aside in that trust fund what it's going to cost to bury them, what it's going to cost to divvy out each year. So they have that trust fund to allot each month to the person that they have as their beneficiary, as income. And it becomes that income for that person. And also life insurance is also used, and I'm talking about this now, but then I'm going to tell you about the different types of life insurance. Also, they use that life insurance to assist with any type of critical illness that may take place in their lives. So they can use that life insurance. So if you have a heart attack or a stroke, or you are diagnosed with cancer, you don't have to wait till you die to pull income out of that life insurance. You can pull it out at the time of that diagnosis, as long as they have the company, the life insurance company, has the paperwork and the diagnosis written out from a doctor saying, "Hey, Miss Kanisha has been diagnosed with a stroke," and once that paperwork is submitted out, they are able to use 80% of what their face value of that life insurance is to take care of them, to be able to reframe their home. So if you have a stroke, you may need a ramp. You may need your bathroom handicap, capable to, utilize, for handicapped needs. You may need money because if you have a stroke, you cannot go back to work. So it takes the pressure and the stress off of them at that time. If something happened, many people use their life insurance to pay off their mortgages when they pass away. So if they have a mortgage and they only owe $60,000 on their mortgage, they don't want to leave their loved ones with $60,000 of debt on their mortgage. So they use their life insurance for retirement, turning 65. They use it as I call it my 401k plan. They stack money in it because, the way we looking now, we may not get Social Security when we turn 65. The way this country is going and our leaders, we may not get Social Security. So they use it for retirement, and with these policies, as I stated, there's so many different types of policies. So we have the whole life policy that never cancels. We have the term policy, which most people often go to is a term policy because it's cheaper. And we always go for the cheaper thing, so they go for the term policy, but they have to keep in mind most term policies are only going to last no more than 25 years. At 25, now you got to get new life insurance at a new age bracket, which means that it's going to go up more. You have the universal life policy. The universal life policy gives you a little bit of both term and whole life. And then you have what my favorite is a universal index policy, and that's the policy that gives you so much added benefits in it. It gives you basically anything that you want for life, for death, as well as retirement.
Wow,
It's
that
a lot.
is awesome. That is so awesome because people won't tell you that. They will not tell you. Like they won't go into like details of everything that you just went in. Like I have life insurance, but I'm like, dang, I should have got the other one then. I love that. Oh my goodness. So with life insurance, what would you, with the young person, I guess, just graduating from college or in college, what would you recommend for them?
I recommend the Y.O.U, which is the index policy. And the reason why I recommend it, like I have one for my son, and I started it out with, I was like, okay, well, I'm just going to put $70 in a month. So at $70 in that policy a month, when my son turns 65, he'll have about $70,000 in that policy that he can utilize to, for retirement. So he can divvy out that 70,000 and say, every month I want to have $1,200 coming from this policy, as my income. He can also utilize that same policy because I do have stroke in my family. I have high blood pressure disease in my family, and different things like that. So he can also use that policy if he was to be diagnosed with a heart attack or stroke or cancer. He can pull 80% out of that policy. His policy is 150,000, so he can pull 80% of that 150 out of that policy to take care of him if he's not able to go back to work, or he needs that money to take care of his everyday expenses for him and his family. And that way he don't have to have any type of gaps in financial issues in his family. So I sit down and I talk to him. He's in the military, and I said, this is what I need you to do. I am placing $70 a month in this. But if you put another 100, that's $70,000 at the end of your 65 is going to double. So instead of 70,000, you're gonna have somewhere between 250, $300,000. So the more money, it's like my 401 savings plan. The more money that we put into that policy on a monthly basis is the more money he's able to pull out, and it has nothing to do with his death benefit. Really.
Oh my goodness.
It has nothing to do with the 150 death benefit that I have on him, but it grows interest, it grows income. And so, I just want to make sure that, I guess I'm a little biased because he's my only son. So I want to make sure that, he's taken care of even from the grave, so to speak. And, he don't have to worry about anyone else, if anything was to happen to him. And he's very capable of taking care of his family. So I sit down and I talk to him about it. I make sure that he understands it. So he was like, okay. And my son loves money. So he's like, okay, I'm going to do it. Okay. So I'm going to match yours and I'm going to put this amount in there. So anyone that, especially, and I'm going to say this, especially someone is in college with a strong entrepreneurial mind and looking at investments and looking at doing some type of business, that is the perfect plan. Because the other thing that a lot of people don't know is that there are people that uses their life insurance as collateral. So you go to a bank, or I just actually had a meeting with Small Business Administration, and that was the first thing I told them. I said, well, I don't have this kind of collateral, but can I use my life insurance? And he said, yeah, we've had several people use it, but a lot of people don't bring that to us because they don't know.
They don't know. I was about to say they don't know that.
So he was surprised when I even, brought that up. And I was like, yes, so this is the amount that I want. Now, the thing with using your life insurance as a collateral is this. When you have a beneficiary, so Kanisha, if you were my beneficiary, I can change. It's called a revocable beneficiary. As a revocable beneficiary, I can change you. I can say, okay, next year I'm gonna revisit my policy and I want to move Kanisha's name off of my policy as a beneficiary, and I can put, anybody else. I can put anybody else on that policy as my beneficiary. So I can change it at any time. Now, the thing is when you using your policy as a collateral, or you're using it to, as basically as a collateral, it's called an irrevocable beneficiary, which means that the only time you can take that person's name off of your beneficiary if both parties are in agreement with it. And that would be after whatever your obligation is for that loan or what you use it for as collateral has been satisfied.
Ooh.
And a lot of people also do that for churches. There's a lot of, seniors who don't have kids, and they their beneficiary is their church.
Wow. Oh my
Yep.
goodness. Okay, so we're gonna pause right here. She's gonna be right back with us, you guys, with this incredible information. We're gonna pause and take a commercial break, and we'll be right back. Okay. All right, we are back. Thank you for joining us again. With me, I have Ms. Mary Jones, and she is talking some incredible news about health and life insurance. It has been so good so far. Anything else you wanted to add to that last segment before we move on to our next question, Ms. Jones?
Actually, no, I don't. I think the only thing that I would like to add, because I think the question was, what type of policy is best for, a young adult? And I would say this, not only a young adult that's getting ready to go to college, young parents who have young kids. We've always looked at the Gerbil life, but is a policy called the Juvenile Policy that actually can do the same effect for individuals who are young parents, and they are saying, okay, well, we need to look at this for when they turn 18 and they need to pull, a certain amount of money out for when it's time to go to college, because sometimes college come around so quickly and the expenses each year goes up and up and up to getting them prepared for their dorm, moving them in their dorm, getting them prepared for the books that they have to buy, maybe even buying a car for them. So the juvenile policy is awesome for individuals who are young adults, or maybe, older adults who still having babies that, that they want to, have not just a policy if their kid, unfortunately passed away, but have a policy that when they turn 18 and 20 years old, that they can pull that money out. And not everybody, and this is what I had to learn with my son, not everybody want to go to college. So you can, stack your policy to where you're giving them the best start of life. They can use it to buy a home, they can use it to buy a car, they can use it to start a business. So, that is one other thing that I wanted to add to it. So it's not just for those that are younger going to college, but for younger parents as well who have smaller kids.
That's awesome. That's awesome. What happens if a person misses like monthly premium or if they're late on the payment?
That's a good question. So, most times with a term policy, if a premium is missed, you have at least 45 days to pay that premium up before the policy lapse. That is a term policy. If you don't pay it up within that 45 days, then that's going to cancel that policy. And most insurance companies will still give you another 45 days to just pay it up. The policy is canceled, but they'll still give you another grace period. It just depends on the insurance company that you can come back and say, okay, I missed it. I need to pay it up. What it's going to take to pay it up so that I don't have any missed time in my policy. And they'll give you that information. Now, with a universal life policy, because it is a factor of whole life as well as term policy in it, most companies will, and this is what's going to be explained to you when you initiate that policy. What do you want to use your, okay, and we're going to get to this too. Let me write it down right here. It's dividends. Because when you're talking about a whole life policy, that policy is an investment where you are the investor into the policy. So every year, if the company is doing well, they give you a dividend, what was called a dividend check. I just had a client, I went through and I was doing Christmas holidays. I was sending out cards and everything. And I was like, she didn't get her money. And she had like $300 just sitting there because the address had changed and she didn't update the address. So I had to get the address updated in the system. And she was like, I didn't know. But the company was doing well. She had two policies and her dividend check that came out to her was over $300. So what they ask you when you initiate the policy is, do you want to get your dividend checks at the end of the year? Or do you want to use it to set in your policy for any time that you cannot make your premium? So you can use that as a backup to make premium. So if you say you're out of work and 3 months you can't pay, you can use that option to take care of that policy premium. Or also with a whole life policy builds cash value. Most insurance companies will take whatever money you have grown into that account. If you don't pay the premium for 2 months, they just automatically snatches it out of your cash value.
Wow.
So it just depends on the type policy that you have, and also how you decide that you want, the policy set up for that type of a situation.
Wow. Dang it. That's some good information here. So, like, under what circumstances can an insurance policy like be canceled? Will it just be canceled just based on you not paying it, or could it be canceled with health issues or?
Once a policy is written, it is written. Once underwriting has approved it, it is approved. The only way that they can cancel it is if non-payment or something, catastrophic happens, where you lied. So if an underwriter has approved your policy based off of the information that you have given, saying that you've never been diagnosed with cancer, because we have two different options when initiating a policy. You can have a medical policy review or a non-medical policy review. Most people do a non-medical policy review so they don't have to go through getting a physical and getting someone come out to do blood work and things of that nature. So most of the policy I have written was non-medical. Now, but anything on that policy that is any questions about your health, your family health history, anything ever comes up where that has not been factual, then that's when they can cancel it. So they can cancel it in that instance, or they can cancel it for non-payment.
Mm. So with that being said, if a person does have cancer, can they get life insurance, and how would they go by getting it?
Now, if you have cancer, I have a client. She's actually one of my church members. She has cancer, and it's been for the past 2 years. She has not been on chemo. So I have a company that writes cancer policies. Now, the thing with cancer policies, she had to be on a policy where she cannot die within 2 year period of that policies being written, or the only thing that her beneficiary will receive from that policy is the money that they put in for the premium. Now, if she makes it past that 2 year, I guess they want to say probational time period, then she get the full amount of that policy. So they have some restrictions when it comes to, writing policies with individuals who have any type of critical illness. It can't
Oh,
be an immediately cash out policy, because there are policies that, once if I write your policy today and you die tomorrow, as long as that policy is enforced today and you die tomorrow, you'll get the full face value of that policy. But then there are policies based off of your illness or any type of critical illness, or what is in that whatever the underwriting decide based off of that you would have to have a 2 year period of wait before you get the full face amount. But outside of that, whatever amount you paid into that policy as a premium is what the only thing that you're going to get out of it. So if you pay $2,000 in premium, that's the only thing the insurance company is going to pay out to you.
okay. Okay. And my last question would be, because like you said earlier, a lot of people are not going to college. They're doing other things. So what would you suggest if someone wants to be a insurance agency? How would they go about doing that?
Okay, insurance agent or insurance agency?
Excuse me, agent.
So each company, each state is different. So you will go through the commissioner, the insurance commissioner of your state. There is a 40-hour. Well, if you're doing life and health, there is 40 hours. If you're just doing life, it's 20 hours. So you have to take a class, and after completing that class, the class instructor gives you a certification to say, okay, they've completed all of the education needed to go in and take the state required test. Once you take the test, you will get, appointed with different companies that you can sell the life insurance or health insurance through, and you're ready to run with it at that point.
Wow. Wow.
Yeah, it's
That is
only a 40-hour course school that you go through. So I know in Georgia, when I took my life and health and I was working full time, I did 2 weekend classes. So it was Friday, Saturday. So it was like long hours those days that I would have to be in that class to complete my 40 hours. Now, when I took my adjusters course, I just went, me and my son did it, and we just went and sat in that class that whole week and took the class and then went and took the tests.
oh, wow. That's amazing. That's amazing. So I know we're about to wrap it up, but there anything else you would like to say or add?
I would just say again, to all the millennials that are listening, young and old, even baby boomers, don't just think of life insurance as a vehicle that will take care a death benefit. Be open to other things that it can offer you, open to other things that it can offer to provide for you, because it is so many different options out there. And just ask, just because a lot of times insurance agents are immediately shut down when you say, hey, do you want to buy an insurance policy? They are immediately shut down. But be open to as much knowledge about it, open to as much opportunities it can provide for you as possible. And I will also say to anyone who's interested in selling insurance, I would say whole talks like this, whole open forums that will give people the opportunity to ask questions as well as you to provide questions. One of the things that I started doing is making a try brochure where it gives you it basically answers the questions of what is whole life, what is term, what is universal life, and some of the things that it can actually, be beneficial for you, just having insurance, and it's not just for death. So I would say, just be open to it, to get as much information, especially for entrepreneurs that, you're saying, dang, I want to do this business, but I don't have the money to. We have, Walt Disney borrowed $1,000 from his life insurance just to buy the property, to start to buy the property for Walt Disney World. And look how huge it is now. JC Penney's borrowed money against his life insurance to start JC Penney's and to be, to start the investment of, growing his companies. And look how big it is, So don't just think of it as a death benefit. Just be open to all the big broader things that it can offer and give you. And don't look at it as saying, oh, that's too much. There's so much impact in it that you can use from it if you just able to get it, keep it, and just ask the questions that you need so you can use it.
Wow. Well, thank you so, so much for this incredible interview
You are
tonight. And
welcome.
yes, yes. And thank you all for joining us tonight. I also want to give honor where honor is due to our Bishop, Bishop Perry, and to our elect, Kamisha Perry. Thank you for giving this stage for us to do this forum about insurance, health insurance, and life insurance. You all have an incredible, blessed night and blessed day. Bye.
Amen. God bless you. Bye bye.